Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, September the 10th. My name is Eric Wilkinson. Yes, you may recognize me as the Wolfman from mainstream media, but what I'm here to do is teach you guys how to implement options into your portfolio, and that is the important thing, is the implementation aspect. Anybody can teach you how to build a strategy, but remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. There's really not a whole lot going on today. We do get some industrial production numbers coming in a little bit worse, coming in worse in France and Italy, but those are not the main industrial production numbers that we look at, but it does give us a little bit of insight into what's going on across the pond. And to be quite honest, anything outside of Great Britain is not looking too good. Out of Great Britain, we got our average earnings index coming in at 4%, expected to be 3.7%, and they revised last month's number up just slightly by 0.1%. Unemployment rate is 3.8%, which is better than the expected 3.9%. And then here in the United States, we got the NFIB, which is the National Federation of Independent Businesses. Small Business Index kind of gives you a gauge of how that small business is feeling about the economy. One thing I talk about is that is one of the more important aspects, is looking at these small businesses, because that's where velocity of money is really created. And it came in at 103.1, right in line with expectations there. And then we get JOLTS jobs openings coming in at 7.2 million, expected to be 7.3, so slightly lower than expected there, and last month's number was revised down slightly. That's about it for the economic data. I don't think any of that stuff is really going to be something that is market moving today, so really it's going to be going off of basically headline news stories for the most part. We've got gold moving higher today. Yesterday we came up to our Fibonacci and found resistance there. Now we started out today above that resistance. It will now act as support going forward. So we're going to be looking at that for our indication here. As you can see here, we came up to this Fibonacci right there, which lines up with $58. Now we are seeing the market support at $58 there. So you can see that line in the sand. $59 a barrel is going to act as resistance again, because it lines up quite nicely with $58.96. We're going to call that $59. All right. So a big move above that would send us into the 60s and maybe even the mid to lower 60s, because we'll start testing that value area high here, which lines up with our 23 Fibonacci extension. All right. So a lot of things going on here in oil. I don't want to see oil go too high here, because that we are in a flux with the market right now, and higher oil prices could hurt the overall economy. One thing to be said about that, Saudi Arabia not really following along the mandate of OPEC's oil and how much they're pushing out onto the market. So that higher supply could ebb a little bit of this bullishness that we're seeing in crude oil going forward. Then we go over to gold futures. They've had a rough couple of days, but today, with just this market action right here, we're getting this doji at the bottom, and it is looking like, you know, anytime you get a hangman doji like that right there, we're looking for something to happen tomorrow where we get a confirmation to the upside and start moving back up. I'm not a gold bug by any means, but it feels like we are wanting to stay in and around this area as the markets are in flux. You know, all of this stuff overseas, are we in a recession? All of these things are going to be driving gold higher. That being said, even if we come back down to around this level here, which is what is where I'm going to find support, I'm not going to play this any. If we break below this area right here, about $1,500 a barrel, or $1,500 a troy ounce, somewhere in and around that. I'm going to be looking to pull the ripcord on this because I'm looking for this setup right there to get confirmed tomorrow and start moving higher with this trade that I have on that I'm talking about with gold. We'll get to that here in a minute, but gold I do believe is going to start moving back in and around the lower to mid 1500s. Right now we're at the very lows, but in the 15 teens, if you will. All right, we've got bonds again looking very similar to that of gold, where we've had that sell-off. The market seems to be finding a little bit of buoyancy here and start making that move back higher. VIX is moving higher with the equities coming off a little bit today. We've got the Dow Jones coming off by about 70 points. We're also seeing yesterday, I talked about that sector rotation out of some of the staples and into more tech, putting some risk on, if you will. That's another reason why we saw gold coming off yesterday, is because people were putting some risk on. And usually when you see that money coming out of gold, that's kind of a risk on trade, because gold is a risk off trade, if you will. All right, NASDAQ is off also as well by about 66 points, finding support in and around that 77.65 area. You can see we're just above that, pierced below this Fibonacci that we're seeing here earlier today. We pierced below that, lines up with the 50-day moving average. So the market is going to try, the bulls at least are going to fight tooth and nail to try and keep it above that area, as we're seeing that battle happen intraday right now as well. Then we move over to the NASDAQ, and I don't know what happened there. NASDAQ, we talked about that, so let's move over to the E-mini S&Ps, coming off by about 17 points. Again, coming to that support level where the 50-day moving average lines up with the 23 Fibonacci extensions that we have. That is going to be a nice little area of support. We're going to find this right in here. That's going to be support. Market, I think, is going to want to bounce higher. I've talked about this. It looks like the economic data that's coming in is bullish. So going forward, barring anything coming out catastrophic in the news, I think that the market is going to continue higher, at least throughout the rest of this week. If we look at the E-mini S&Ps on the daily chart, where we break it down, each candle is a 30-minute, gray sections overnight, black sections during the full day session. Obviously the whole blue area is what has happened to date, or up until this point throughout the day. Overnight inventory short, not really any attempt to get out of that at this point, but I do expect the market to start moving a little bit higher throughout the day with the lack of any news coming out that would be market moving for the most part. All right, Qualcomm is a trade that we got out of relatively quickly. This was a great trade that we put on, and it was on the strangle, if you guys remember. And I went into Qualcomm and did the September contract, so it was very close to expiration. Remember, I only put this on about 11 or 10 days ago, so didn't have to have a whole lot of risk on in this trade. As you can see, we put this on right around, I would say right around here. We got that volatility coming out, and pretty much a directionality, which we were expecting to move sideways, stay within a relatively tight range there, and was actually, we were looking for it to be in and around probably a tight range there. So you can see that I got tested on that trade there, and then with the market moving a little bit higher, my range was right in here. So talking about with that, we were expecting a sideways trade. This volatility coming out of the trade really was the thing that helped us, because you can see with my strike location I had on the September, the 66 puts I was short and the 80 calls. I was tested on those 80 calls. You can see it pierced through there, but with that volatility coming out, I was able to be directionally wrong and still make money on this trade. So originally sold that for $1.18, was able to buy it back for 49 cents today. So Qualcomm working out for me on that trade. As you can see, volatility being the major factor that influenced this trade to be a winner. And then we move over to GLD, this was the trade that I was talking about. I'm going to play this as a little bit of a move where we're going to start seeing gold continue a little bit higher here. The support level right here lining up with 35.66. Well, I went in just a little bit higher than that and did it at the 16 delta, like we talk about in these market commentaries, where to go in for strike location. And I went into the October and sold the 136 puts in there for 51 cents. Now that puts me right there at that support level. You know, you take in the break even, I take in the 136 minus the 51 cents that I collected. So now my break even is 135.49 or 135.50, let's call it. And I'm just slightly below that area there. So I would expect that this Fibonacci is going to act as a strong support level if we start seeing gold pierce down. But you know, this action today, I'm not going to be necessarily looking at the chart here, but I'm going to be more so concerned with the gold futures from the CME /GC that I was showing you the chart of. That gives me a little bit better indication as well. So anything breaking below this area here is likely going to get me to pull the ripcord on this trade if I don't get that bounce almost immediately. All right, so did those for 51 cents like I talked about, with the break even just slightly below there. And that's about it. We are still continuing this webinar series where we are doing courses on, we come up with a directional assumption and then find the best strategy for that. There's a lot of things that go into implementation of an option strategy. It's not just going out there and willy-nilly coming up with a directional assumption and then, you know, if I'm bullish, just go out and buy calls like they talk about on TV. But we have rules here that will set you up for success by creating a strategy that fits that environment around the underlying you have an assumption in. All right, so hopefully you guys can check that out. Also follow us on Facebook so you can get access to these market commentaries much quicker than what we were being able to get those out to you before. A lot of people are giving us some good feedback on that, so it's working out quite nicely. All right, that's all I got for you, other than if you can't take that, take it easy.